Right, okay, technical analysis on Dogecoin today at the request from one of the guys in the Discord group. This one's for you, mate. And we've got Dogecoin currently trading now at 23 cents. So I thought we'd do something a little bit differently because what excites me is within the Discord group, a lot of you guys are asking for educational content. And I've been doing this for 3.5 years on YouTube and nobody asked for educational content. So pat yourself on the back because the self-developers are the guys that I want here. And in my opinion, that's why I've got such a small following. I don't sell myself to leverage exchanges. I don't sell myself to anything that is going to wreck my community. So that means I pretty much get next to nothing for doing my YouTube channel. And I'm here every single day, chucking out content. And I'm doing it to create something of a community of self-developers. It doesn't have to be a big community, but self-developers of people that can look and understand exactly how to read a price chart. Because my goal is to teach you every single thing that I know, and I'm constantly developing every single day. So what we're going to do on this Dogecoin chart is we're going to completely get rid of all of this analysis, and then we're going to rebuild it in. I'm going to show you exactly what it means, which carries the most weight, and how you can get a high probability move by just looking at certain metrics, adding them up to the price chart alongside your indicators to get additional confluence, and then waiting for certain metrics to happen. And before we get rid of everything on this price chart, firstly, let me just teach you why these things are important, why these Fibonacci numbers are so special, and how price reacts at these numbers, and how you expect these numbers to be sticking points going forward, because you've got reactions from these sticking points in the past. These Fibonacci numbers will blow your mind. Once you start using them, you start using them correctly, you understand exactly where this next swing is going to have a resistance point, where the next support base is going to be, whether you're putting in higher highs and higher lows. And then we can add in indicators like the stochastic RSI, like the RSI, add divergences on top of that, and then build weight on top of our thesis. But I'm not going to go too much into that today. We're just going to look at exactly what's on this price chart. Now, in the last video, I said one thing. Putting in this new high, that was a good thing. We'd taken out the lower high. We were expecting a pullback, and this was the pullback zone. 0.19759, 0.21353. You could see price come back in into this buy zone, and then we got a reaction from the buy zone, and then a push to the upside. So there's the buy zone. Let me get rid of that. That's gone. And what's happened here? This yellow line is the 50 period moving average. This green line is the 200 period moving average. When the green line crosses underneath the yellow line, the 50 period in this instance, that is a golden cross. When you get a golden cross, that represents, especially when retail are involved, that indicates bullish momentum. Now, we can go back and we can look at different scenarios. We've got a death cross here. What happened on the death cross? Now, you've got to understand that these things are lagging indicators. So a lot of the price is being built in, and whether the price is above or whether the price is below is going to give you a strong indication of whether you're going to get a big push to the downside or a big push to the upside. So we got it in reverse here. We had this big swing. It's a lagging indicator. That's where the golden cross happened. Then we got a continuation to the downside. There's the golden cross. We're expecting a continuation to the upside, and we'll talk about upside momentum very shortly. But if you just go back and look at previous golden crosses like this one here, that one here, on the back of that, since we had the golden cross, that was a move to the upside of 274%. So that's retail. Retail were interested in Jasmy back then. And we're at this point now. So it is all about getting entries, and we're creating something. We're creating a bull flag, a bull pennant. We'll talk about the bull pennant very shortly. So we've got these two indicators, the 200 moving average. Remember, above the 200, you're bullish. Below the 200, you're bearish. You've got your 50 period moving average, which is your slower paced moving average, which is going to give you a forward leading indicator by 4 times in comparison to the 200 daily moving average. So you can see that this is starting to run up. That's more faster paced. We've held the 200, and we're making a move to the upside. So we've talked about that. We'll talk about Fibonacci next. And you can see there's two lines here. You've got your yellow count, and then you've got your green count. What's the difference between these two? Now, the green count is from this big swing all the way here. This is the higher time frame. Now, remember, the higher the time frame, the higher the conviction. So that means it's going to carry more weight. Why does it carry more weight? Because there's more eyes on the chart. When there's more eyes on the chart, there's more people looking at the same level. That creates, in this instance, a sell wall, because people are putting a consistent price order because more eyes are on the chart at a certain level, and that's expected to get a pullback on the back of that. So the green count in this instance. In fact, I'm not going to take them off. I'm just going to explain exactly what they are so you can understand. The green count is the big swing. That is the macro swing, and that's where you expect a bigger reaction. So we've got the 38.2% retracement. 38.2% retracement is here at 31 cents, and that's going to be the next big reaction point. Now, when we had this big move, what happened? We managed to break the 38.2 with little resistance, and then where did we react? 61.8. Can you see why these moves, these Fibonacci numbers, sorry, are so important? They're sticking points. Look where it reacted, 61.8. Where does it come down? We can zoom in. Where did we get a reaction? It's pulled back. It's pulled back to this here, 38.2 of the low count. We'll talk about the low count very shortly, but you can see where price leveled off just around here, the 38.2 of the green count, which is the higher count, which carries more weight. So the next one, we'll get rid of this and we'll do it again just to show you. So the next one is going to be the retracement from the recent swing, which is the shorter time frame, which carries less weight, but it gives you more of a prediction of what's going to happen going forward in the shorter time frame. So we'll do a Fibonacci retracement this time from the bottom all the way to the top. And then you can see how far is price going to retrace. We've come back down to the 786. Let's make sure that the fibs are on right. Come back down to the 786. So you've got a bounce here at the 786. And you can see we've got a reaction from the 786. Look how price respects this. You can see levels off here, levels off here. And you can see once we dropped through, that was resistance. So that carries a lot of weight. This was resistance. And then we broke through. If we manage to come back down underneath the 200 moving average, underneath the 50 moving average, which are going to act as strong support, so there's less probability of that happening, you know that that's going to be your next support base at 16 cents. So it's important where we are now. We understand one thing. Let's get rid of that and make sure that that's the yellow count so we don't confuse things. I've tried to slow it down, guys, just so you can understand it a bit better. Right, actually, we've made the bigger one the yellow count now. So the green count's the shorter time frame now. So we've got the green count here, and we understand that we're right below it. Can you see how price is reacting? Look, support, you're underneath, resistance. So we understand by the end of today, we've got 14 hours and 7. If we can get a break and a close above 23 cents, then we can expect further upside. Now, we're creating something else here as well. I'm not going to bring indicators on. I'm not going to overcomplicate things. So I just wanted to show you Fibonacci numbers on a higher time frame and on a shorter time frame and how to use them. So this is a bull pennant. Now, these things are easy to play, guys. Once you get a break to the upside, if the break's volatile, you're waiting for a retest. You always get a retest and reclaim previous resistance as support 9 times out of 10. Once you come back up, retest, then that's a confirmation buy, and it's exactly the same place as the resistance. So this is why it's important to wait. So you're at resistance now. Imagine buying now. So you're in a pennant. You don't know whether you're going to break to the upside. You don't know whether you're going to break to the downside. So we've got a probability to say maybe 33% to the downside, 66% to the upside, because we're in a bull flag. So there's a higher probability of breaking to the upside. We haven't broken yet. What happens if we get a drop to the downside? If we get a drop to the downside, that means we're wrong. So we're building in risk here. You're building in risk. Now, by waiting for the break and waiting for the retest, you're coming back and you're reclaiming this level here, the 78.6. Is it the 78.6 or is it 618? You're reclaiming the 61.8% retracement, the golden zone. And guess what? It's exactly the same price as the resistance area here. However, that's a support buy and it carries even more weight. So if you've got around a 66% chance of something breaking to the upside, and then you're coming back and you're reclaiming that previous resistance as support, that's increasing your percentage to around about 75% as an example. So that's why it's important. That's how you play bull pennants. That's how you play bull flags. When you're in a bull market, these things are absolutely amazing to play because they carry a high probability. So that's good. We've got a golden cross. We're waiting for a break to the upside. We know we've got a 38.2% rejection at 31 cents. We know, in fact, let's measure the next swing. Let's measure the next swing because this is a swing 1. This is the start of a swing. We've taken out the lower high, so we're starting a new move here. So if we just measure that using a Fibonacci extension tool this time, sorry if this confuses you, this is an extension. So with a retracement, you're putting it from the low to the high when you're bullish, And then you're looking for a retracement of 38.2, 61.8, or 78.6. If you're bearish and you're taking it from the previous high, you're putting it at the top, and you're coming all the way to the bottom, and then you're looking for a retracement upwards of the 38.2, the 61.8, and the 78.6. Now, with a Fibonacci extension tool, what we're looking for is actual projections rather than the retracements. So you're looking for projections. So the way that you do it is you've got your extension tool on, you going from the swing low to the swing high. And then what you're doing is you're coming back down to the previous low. If it's put a higher low in, which this one has, and then you're searching for a couple of things depending on what swing you're on. So this is swing one. We've got a pullback of swing two. Swing two is going to be a shorter pullback. You can tell it's a shorter pullback because we put in a higher low. We've held the 50, we've held the 200, and we're expecting a break to the upside. Once we've got a break, once we've got a confirmation, we've got some key levels up here. You've got your 1-to-1 equal measured move, which is sat at 33 cents. Now, we want an extension of a 1-to-1. It doesn't have to hit the 1272. It doesn't have to hit the 1618, but it does have to break the 1-to-1 for this move to be valid. So if we do breach the 1-to-1 equal measure move and even manage to push up towards the 1272, which is 37 cents, by the way, that coincides with one thing. That means that we've taken back the 78, or we've taken back the 38.2%, sorry, from this big macro swing. So we've taken back the 38.2. That's the macro swing. That carries the higher time frame. That carries more weight. Once you get past that, that's going to be a strong resistance. So those are the key levels that I've got in the short term. You know, we've got a bit of resistance to get through, but things are looking bullish on Dogecoin. And I'm expecting a move to the upside on Dogecoin. And I'm expecting us to break some key barriers in the short term. I'm not going to add any indicators on there, guys, because I don't want to overcomplicate things, but get yourself in the Discord group because you're asking for education. You're going to get more education. If there's anything in particular that you want me to cover or you want me to go over in future videos, let me know, guys. And if there's anything you can teach me, if there's anything that you know that I don't look at from a fundamental perspective, from whatever, let me know, guys, because I want to learn from each and every single one of you as well. Right, okay, we're in it together. Take care of yourself. Goodbye from me.